Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at some potential hotspots in the markets where you might want to focus your eyes for potential opportunities. Today, it is June 21st, Monday, starting a new week. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. Before Brian and I jump into it, we do need to cover this quick disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, what are we looking at today? What are we seeing this morning? Well, we're getting a little bit of a relief rally. Had a rally in the U.S. equities overnight, so we're going to take a look at some technical levels in the Dow and the Nasdaq. I think the charts are looking a little bit similar, but we are seeing we're seeing green after last week, which was the worst week in the Dow since January. So for half a year, it was a rough week last week for the equity markets. And then we're also going to take a peek over at oil. And the reason we're taking a peek at oil is there are some interesting technical levels there, but there's also some, things are heating up a little bit politically in the Middle East, and that always has the possibility to change the supply side of the equation. Never quite sure how that will manifest itself. So in oil, definitely a supply demand driven product. We also know that demand is going up. If you start playing with supply, it can really move prices around. So with that, Brian, I'm going to flip it over to you, and let's talk a little bit about U.S. equities, and then we can take a peek at oil.
Yeah, sure. So far this morning, today's not one of those action-packed news days. We have the ECB president speaking at 10:15 today, but you'll see that there's really nothing U.S.-wise in there today. Even when we click, kind of less impact, you can see there's really nothing. We have, FOMC member Williams speaks later today. He's not really one of the big movers. He's not one of the big names. He's not even considered orange. So it's definitely one of the lesser players. So it should be rather slow. And again, as Todd mentioned, last week was not the best week for the indices, which tends to mean that we have somewhat of a kind of reversal for the beginning of this week as profit taking is kicked in, and kind of like when the worst is there, we've absorbed it now, and then we kind of roll back into things. And as far as on the news front, there's only one headline that is really kind of kicked out there, and it's more associated with oil, but I will bring it up now just because, again, there is one kind of, I guess it's kind of not a motivating factor, but it does tend to raise the overall indices with things. That is, anytime there is war, we're sending soldiers. That tends to be considered good for the economy for some reason. I guess the additional spending or whatever it is. But Iran has a newly elected president, and it's still president-elect. Some are saying that he is very hard-nosed, but he is kind of taking a very, very big stand talking about the U.S. sanctions on Iran. And one thing that he pointed out is that the Iran's ballistic missile program is non-negotiable. And he says, he basically said that he would not be willing to meet with President Biden to even discuss it. And it's kind of canceled a meeting that they had planned. So it's definitely kind of a hard line. Is anything going to come from it? Who knows? And again, we'll cover it more on oil. Any talk of that, and again, as soon as you start talking about sending missiles and weapons and planes and tanks and all that kind of stuff, it does tend to bring the Dow up. Now,
we had a word for that on the floor, by the way. It was crazy. We would call it a war rally.
Yeah, war rally. Yeah.
Right.
And looking at it, I mean, you can see that the VIX is down right now. Typically, when you talk about war or anything that's geopolitical, it'll typically jack the VIX up. Now, the VIX is just a volatility index. Typically, what we see is as the VIX is coming down, it means there's lower volatility, which is more associated with the markets going higher because there's not that fear in there. When the VIX is high, that's where there's a high level of fear, and you tend to see the markets, again, when the markets are going down, people are a lot more fearful. There's not many people scared when the market is going straight up, right? It's one of those things, but we are seeing that the VIX is down today. And it is rather high. I mean, 20 is on the higher spectrum of things. You can see it's not as high as it could be. But again, I do think after last week, now that we have some certainty around what the Fed is actually thinking, again, that's leading us into three different indices that are green right now. ES is an interesting level. Now, it has rallied up, but it started really at kind of late last night at midnight. That's not typically where you want to see a rally start from because there's not really a ton of people trading at that point. And in fact, it wasn't until this little kind of pullback right here is when the European traders stepped in. Where it's pulled up to now, yes, it is green right now. But if you're looking at this and saying, hey, wait a second, we got these lower highs in here. We got a little bit of a lower low. We are at a kind of a very small level. And again, we know we dropped this down to a 15-minute to really kind of find levels. It is lining up for another push higher, but we do have some sellers. So it's kind of an interesting spot today. Again, do we retrace everything we've kind of accomplished this morning? It is possible, right? It is coming up to an area where on the 15 and a 30-minute, we've seen sellers really kind of help accelerate that down, but it's not the freshest level it has been there. And again, Iran news and, kind of anything geopolitical is not always best, but right now it does look like it's setting up for somewhat of an open position at the, right around the open. But I would say that we got to be cautious. I don't know. This is an old area of interest. You can see it was here, and then we pulled up to it. We'd probably have to adjust it a bit higher, but I would say we need to watch out for probably, up here at 41.90. That's a 20-point mover in the ES. It's not horrible if we take it off that level. But again, with lack of any news, this is really just, okay, is the worst in? Do we know everything with interest rates? Okay, let's start to build back up again. Or is there going to be, some other comments today? But being a Monday with no economic news events to really justify inflation or non-inflation or rising interest rates, I think at this point, it's going to go back to positive things like Amazon Prime Day starting today. People are like, oh, that'd be good. Amazon will be making money. And then that's positive. And then, you guys know how it works.
Right.
That would be ES.
All right. Yeah. You know what? I was going to drop this in, in just for a second, but we will. All these charts look the same. And the only reason I'm doing this real quickly, look at the ES. Let's go ahead and jump over to the Dow because the Dow chart looks nearly identical.
Here's NQ. NQ is doing the same thing. This one is still up barely. It's up 0.13 since the European session right here, right? The European session sent this higher. Profit taking came in when it hit this level of sellers. It pulled back down again. And again, this is where the last pop was when the big traders stepped in again. So we're kind of coming to that same area. And again, we still got a bit of time. We got 40 minutes. If it bases and comes through, again, we may have to look for maybe a 10:30 reversal and take it off this lower level here. The Dow is kind of a similar situation. Now, the Dow is actually butting up to a zone. It hasn't had that level of pullback, which is fine. It's up the most. It's up 0.58% right now. And again, we like seeing basing like this, meaning it's pushing. It was stabilized. It found more buyers, and it's pushing again. It's eating all these buyers up. And I would say, really, the risk on this one is a bit higher. If we were able to break through this level, I think we're probably clear up to 33,746, which again, that's a pretty nice bit of movement there on the Dow. And again, there's a level sitting right there where we had a decent pullback, and it was at 345, meaning this was the push up. European traders stepped in, grabbed the orders, and then threw it higher. And now we're using the European orders to kind of break through. And if we wanted to shrink this down, this was actually done on a 30-minute. You can kind of shrink it up into this level. And one possible scenario for this is if you kind of want to lower your risk on there. Actually, I guess in reality, we could use the level down here. Either one of those work, but I would say probably a break of 33,460-ish. If we get some basing in here, you could take that off and try to basically capture that level here. Would work for this today. But is it going to be an earth-shattering, rocket-moving day? I would say probably not. I do think we get movement, and I think after how bad last week was, again, that was a lot of movement in 1 week straight down. I do feel that this, at least early week today, I do think we will have some movement back to the top side. So I'd be looking for longs more than anything else. But again, we're in the blue area, which means we're kind of in that no man's land in the middle. So you want to look for really kind of small pullbacks and again levels. And there's an okay one just a little bit lower as well. But the biggest problem with the Dow right now is the fact that we have this level of basing right here, and we could shrink it to that level. Although again, every time we go smaller, we could shrink this smaller. It's really the 30-minute level that it's bouncing off of right now when we looked at it before. So
So, I was just trying to take a peek, for the Dow. I was just taking a quick peek. Where are our call spreads? If you wanted to try to catch an upside move, this one's a little further away, but not too bad. You could take a look at some of these call spreads in here if you were interested. I was going to take a quick peek also over at the knockouts in the Dow, just to see Wall Street 30. Let's just bring these up and see where these levels are. We've actually got a knockout that's right around in here that could be interesting. If we've got a little bit of support below, a knockout could be a way to play this. Again, if it drops down and touches that bottom, the floor, you would get knocked out. Whereas with call spreads, you wouldn't. But it's instead of just binary options, just wanted to kind of put it out there that you could take a look at the levels of the knockouts and the call spreads, as well as if you're looking for a potential, continued extension of this support that we're seeing in the equities after last week.
Yeah,
All right,
and if
let's
you don't
take
like guessing games, I mean, don't forget too. With lack of any news today, the 10:30 time frame is your typical reversal time. If you're not sure, there's no reason to play a guessing game and just say I'm going to put it on because you can wait till it drives in one of your levels at 10:30 and say, okay, it is finally pushed in. Stack those odds in your favor. That's when the reversal and the profit taking from the open typically happens. That could be the opportunity to take it then, and then again match it up to maybe a shorter duration level.
Right, and then look at those reversals.
Yeah.
If it's going to be, as people, right, they trade the open, then they look to get
Mhm.
out and move on with their day.
Yep.
So also timing is actually really important. All right, let's take a quick peek over at oil because
Yep.
it has been setting up with these big small moves that you've been talking about.
Yeah, on Friday, weird Friday, we were sitting right here at the end of the blue time frame. We block off the European session, then we talk about the U.S. session. And if you remember, we had the big little situation, or I'm sorry, the little big situation, and it's one that we've seen a lot of different times, right? Little big, little big, little big. And I mentioned any type of break above. Again, look for this to spike higher. We were looking for overall short opportunities if we could get back up. Again, this has been a zone that you can see has turned these spikes away multiple times at this point. But it did create a racetrack on Friday. You can see these long extended green candles here, right? So excuse me, here's the area of basing. We've bounced off of it once already. We're pushing through it again. I would say at this point, there's probably a short opportunity in here. And again, you would say, wait a second, we're going short off the Iranian news. And right now, it doesn't seem like the market is reacting. The VIX is nothing is spiking. There's a 1 to 3 risk to reward ratio trade. And in fact, where our profit target would be a 1 to 5.8, almost a 1 to 6 risk to reward ratio trade. So I would say, overall, should we be looking to short oil with everything going on in the economy? I don't think so. I think the demand is going to continue to rise. If you look at the inventory last week, it was down 7.4 million. It's been down big numbers the last 3 weeks in a row, and they're definitely able to adjust it. And now we've actually seen our first hurricane come through. Didn't really affect the oil industry, but you got to be thinking, all right, the volatility in this area is, or at least the fear level in oil is going to be starting to get a little bit higher because everybody knows hurricanes mean the Gulf could be shut down, etc. At this point, the economy is recovering. You saw protests over the weekend, particularly in Maryland. We did that they are removing the additional unemployment benefits because people are just staying at home and not wanting to take jobs. I know that we have restaurants around here that are closing 1 day a week because they can't hire enough bodies. So it's one of those things that kind of had to happen, but people are fighting it. But people are going to have to go back to work, which means more people driving, which means even more strain on demand. People want to get out of their house and people want to travel. So overall, I do think there's a short opportunity here, but I think we should be looking for oil to go higher, just with all the the fundamental factors that are going on right now.
Yep. Just for a trade for today, again, with that little, we had the big, little, now we have a little, looking for a potential big move. If you wanted to play this from the short side, I think binaries would be an interesting way to play this. And again, these are the shorter durations. These are the 8 a.m. to 10 a.m. ones where you're going to have more choices, more binary option choices. The spread between the strikes is smaller, which is, it kind of helps again for someone looking to trade the open and maybe capture some short-term moves early in the day, and then if you catch it right, enjoy the rest of your day.
Mm-hmm.
With that, Brian, is there anything else that you want to? Any parting shots you got for today? A quiet day, but looking green on the equities. Got some technical levels here in oil that are setting up that could be kind of interesting. Anything else you wanted to toss out there?
No, I would just say the pound has been the big mover of the night. I would say look for some reversals in the pound, particularly against the dollar, but even against the pound yen, it looks like there could be some potential in there as well. Just kind of rolling back down into that, at least the pound dollar into the 138 area. Like I said, this is European session has moved this up. We're kind of topping. It was at an area where you'd seen it before. The dollar's more or less been pushing straight down as far as the dollar index goes. Now we're starting to see that basing as buyers are stepping back in. And the trend we've seen in the last week, 2 weeks, is when the U.S. trader steps in, is when dollar strength seems to be stepping back in. And the level that we were selling off of before has been hit 3-4 times at this point. So it's not like this 92 level is necessarily a sell level anymore. It's just a level that, price has really kind of, drug itself in there. So maybe an opportunity to get a reversal, get a short in the pound dollar or pound yen.
All right. Excellent. All right. With that, any questions for Nadex, please email us, customer service at nadex.com, whether it's about our markets, our products, our platform, your account, please. We can't help you if you're having any challenges. If you don't reach out to us, please email us, customer service at nadex.com. You got any questions for Brian? He is also very accessible. You can email him, support at keeptradingsimple.com. Brian and I will be back tomorrow morning, and then we do have that full day-long how to day trade FX markets boot camp tomorrow for anyone who's relatively new to the markets. You can register for that on the Nadex website if you haven't done so already. Brian and I will be back tomorrow morning, though. So with that, just a reminder, we're looking green in the equities, which is a nice little bit of a relief after the sell-off last week, following those, particularly following the statement from a Fed president. So they are, other guys are speaking today. Tomorrow, just a heads up that in the afternoon, Fed Chairman Powell will be testifying. So could make for some interesting times tomorrow when if they decide to grill him with some questions. With that, want to wish everyone good luck in the markets. Brian and I will catch you again tomorrow morning. Thanks, everyone.